Well, the question, did that happen, begs the question, what do you mean by happen? Because when you are dealing with fundamental realities and you pose a question, you have to understand that the reality of the concepts of your question, when you're digging that deep, are just as questionable as what you're questioning. You know, so people say to me, do you believe in God? And I think, okay, there's a couple of mysteries in that question. What do you mean do? What do you mean you? What do you mean believe? And what do you mean God? And you say as the questioner, well, we already know what all those things mean, except belief in God. And I think, no, if we're going to get down to the fundamental brass tacks, we don't really know what any of those things are.
What's going on, guys? It's K-Dub here with another episode of Crypto Zombie. Welcome back to the channel. Hope you're having a great day today. Hope your conversations were not as awkward as that intro, but you can't deny it, and I'm sure it's not the first you're hearing it, but Bitcoin certainly has provided us with a Black Friday opportunity, still hovering around these same levels. We are definitely in some major consolidation. Now, I do want to talk about some interesting things that I am seeing in the Bitcoin chart. We'll get to that in a minute, but also today, we had a letter come out from Barry Silbert, and he's down here in this picture right above me, right here, and he is the CEO of the Digital Currency Group, and he did come out with a statement. So I do want to go over specifically what their situation is, how bad it is, and whether or not we should be worried about the continuation of this FTX, contagion. And the other thing too is that right now, crypto sentiment is probably the worst that it's ever been. In fact, we have evidence right now that there's about 75% of institutional products right now, which are basically in shorts. So the majority of these institutions are assuming that it's going to get worse. They are shorting it right now. You would think this is bad. It sounds bad on the surface, but also we do know that sometimes we can get these sort of short squeezes, right? So I will talk about that. And, at the end of the day, we have Bitcoin miners that are struggling as well as the price gets lower. So is there any type of a silver lining to this cloud? Well, that's what I want to talk about. I want to talk about why it's actually not all negative. In fact, there is one specific Bitcoin data point that we need to go over, which is actually a milestone, which I'll go over in a bit. And also, there is one chart in particular showing something that we have literally never seen ever in the history of Bitcoin, and it's none of the indicators that I've ever talked about on this channel. Like, it's something literally we've never seen. So if you want to stick around to the end, guys, we have so much content to go over today between the news, the sentiment, the institutions who are shorting, and also this metric for Bitcoin. But I do want to just friendly remind you guys that, the Black Friday sale, by the way, on Ledger just absolutely sold out. You can see right here, they don't have any more of these available. They do have a 10% off code. If you are interested, you could just put in Black Friday 10, or apparently on Monday, they're going to be bringing back this Bitcoin, thing where you get $30 or $20 deciding on which one you want. And also Cyber Monday over on TradingView. This is what I use to chart. It is a free service, by the way. You have to use ads. But if you are interested, guys, check that out. It's 3 days left. You get 60% off. So just letting you know about those deals that are out there, guys. But before we start and talk about the price action, we need to talk about the situation with Genesis, right? We know that Genesis is in trouble. We know that Genesis is tied to GRAYSCALE. We know that they're tied to the Digital Currency Group. And Barry Silbert actually came out right here. You can see here's a screenshot of the statement that he issued to the shareholders. And I just want to break that down for you guys just a little bit. So what they ended up, in a nutshell, disclosing was basically that they have $2 billion with a B, $2 billion in debt, most of which are intercompany loans. Now, the loans are $575 million. This is due in March of 2023. So they have until March of next year to somehow come up with this $575 million, right? Which means that we probably won't see anything too crazy in the short term. Now, of course, anything could happen, but the fact that they do have until March of next year could be potentially a good sign. It does give them some breathing room. The second one that they have is a 1.1 billion promissory note, and this is not due until the year 2032. So the company also got a credit facility worth $350 million from a group led by Eldridge, right? Now, this guy over here, Ram Ahluwalia, I think that's how you say his name, he was actually diving a little bit deeper into it. He had this gigantic tweet storm. I'm not going to go into it, but to break it down, ultimately he thinks that they probably used their Grayscale Bitcoin holdings as collateral to get the first loan from Genesis, right? But what happened was with the Three Arrow Capital implosion, Digital Currency Group had to buy its GBTC. Unfortunately, 3AC also acquired GBTC shares with Genesis Lending financing the deal. So, we have their net asset value, which is obviously declining. This was part of what contributed to the Three Arrows Capital implosion. And it also meant that the bankrupt hedge fund did not have the collateral to cover its loans from Genesis. In fact, there was still a $462 million shortfall. So in order to prevent Genesis Lending from becoming insolvent, Digital Currency Group stepped in and it took control of some, if not all, of Three Arrow Capital's GBTC shares. Now, all these patterns, according to what he's saying, suggest that the group over-leveraged on GBTC. And with the discount widening, it's been difficult for the company to deleverage. However, it has been doing that through earnings and could also sell its GBTC holdings, but the company will incur significant realized losses if it chooses to sell. The average price it paid for shares is $24, whereas it's currently down around $9. So he noted that despite these challenges, he does believe that Digital Currency Group is strong enough to absorb the losses, which means it is unlikely to become bankrupt. So that's kind of a little bit of good news, right? But he pointed out that the company would still have to raise fresh equity soon enough and hope that Bitcoin's value doesn't drop any further. The DCG situation further shows how interconnected the crypto industry is financially and the need for regulation. And, if we actually just come over here, you could see that, he says down here, taking a step back, let me be clear, DCG will continue to be a leading builder of the industry, and we are committed to our long-term mission of accelerating the development of bettering the financial system. We have weathered previous crypto winters, and while this one may feel more severe, collectively we will come out stronger. And here's the part I like down here. DCG has only raised about $25 million in primary capital, and we are pacing to do $800 million in revenue this year. So, if they continue to have this sort of cash flow of revenue, then it shouldn't really be a problem for them. It's just not going to be that great of a year as far as profits is concerned, right? He also goes on to say that, he hasn't sold any of his shares, etc. So hopefully that kind of calms down the markets. It still doesn't mean that we have not seen the full extent of the deleveraging just yet, but this is somewhat of good news to take, at least in the short term. Also, this thing that we had, this fiasco with FTX, has also allowed some of these other companies to step up a bit, right? You could see right here, it has put pressure on the industry, but we have Bybit that launched a $100 million fund to help market makers and high-frequency trading institutions struggling with financial or operational difficulties. We also had Binance publishing a Merkle Tree-backed proof of funds for its Bitcoin deposits. The exchange outlined how users can then use a mechanism to verify their holdings, right? And we also saw BitGet doing something very similar as well. But nevertheless, we still do have, all of the mainstream media painting it again as just poor Sam, right? Even Elon Musk commented and said Wall Street Journal literally giving foot massages to a criminal, right? Now, this is where it gets a little bit interesting. We've gone over all the conspiracies, all the connections, all the different parties, all the different donations to political parties and Elizabeth Warren and, all these other people who were involved. And, Tom Emmer had pointed out that his office had received numerous tips from crypto and blockchain firms that SEC Chair Gary Gensler's information reporting requests to the crypto community are overburdensome, don't feel particularly voluntarily, and are stifling innovation. He says, we were concerned in March that Gary Gensler was taking an indiscriminate and inconsistent approach to oversight of the crypto community. We are even more concerned now as we see his strategy miss Celsius, miss Voyager, miss Terra Luna, and now miss FTX. So a lot of people are saying, Gary, a lot of this is also on your shoulders. You had a lot of opportunity to come in, regulate properly, and instead you're too busy, fining and doing this sort of publicity stunt where Kim Kardashian has to pay like 1.2 million, right? Obviously completely overlooking the biggest elephant in the room. So people are not happy with Gary Gensler right now. And, as much as we don't necessarily need the regulation 100%, for crypto or specifically Bitcoin to thrive, like we know, a lot of these institutions, especially after seeing this, are a little fearful of getting back into the game. Tom Lee from Fundstrat, he actually pointed out that it has been a very hard hit for the industry, but he still does remain optimistic.
So, Tom, has any of this altered your view on crypto? I know you're a longtime Bitcoin bull, but the blow up of FTX, the continued pressure on Bitcoin, has it changed your mind at all?
It's been a horrific year for crypto. Nobody's made money in crypto in 2022, but it's not that different from 2018. If we look back at that crypto winter when Bitcoin went from, 17,000 to, something like 1,200 or so, that was the time when some of the best projects were created. So I think that this is an important moment for the industry. I think it is cleaning a lot of and cleansing a lot of bad players. And I think it's important. But, do I think crypto is dead? No, I think there's a lot of people throwing gasoline in a crowded theater and yelling fire. And it's just going to be important for those who really like what decentralization and what Bitcoin are doing. They need to have the staying power. But yeah, 2022 is, it's been terrible.
So, but are you still telling people to buy Bitcoin?
Yes. We first read about Bitcoin in 2017, and we recommended people put 1% of their funds into Bitcoin. At the time, Bitcoin was under 1,000. That holding today would be 40% of their portfolio without rebalance. So does Bitcoin still make sense for someone who wants to sort of have some sort of ballast? Yes. I think Bitcoin, is it going to have another terrible year next year? I think if there's more fraud, yes. But if this was like the moment of financial stress, what we're going to see emerge from this is companies that emerged out of the GFC. The ascendancy of banks like JP Morgan really came out of '08. And I think the mistake people made in the GFC was to say banks were untouchable. And I think that's what's happening with crypto now.
Now, just to point it out, in all fairness, Tom Lee has not always been the greatest with price predictions, which is why price predictions are kind of silly in a way, because we usually never get them, right? Everybody was calling for $1,000 Bitcoin in 2018, 2019. We never got it. It only went to 3. Everyone was calling for $100,000 Bitcoin in the previous run. We didn't get it. It only went to 70. Now we're having people call again for 9,000, 10,000. Now, of course, it could be different this time. We do have the Fed, which, by the way, they are looking to maybe calm down a bit, but nevertheless, of course, it is a different scenario. He did, however, say that it would be between 15 and 50 by 2022. So he did nail that. But of course, they say the biggest downside for crypto would be a vulnerability exposed in Bitcoin, because that's the most important blockchain. So obviously, if there was a bug in actual Bitcoin itself, yes, that would be an issue. But the Bitcoin blockchain has been running for 8%. There's a website. I don't remember what it's called, but you can just Google like Bitcoin network uptime, and it only ever went down for I think it was 8 minutes or something. And this was way back in the beginning. And, it was just something that they took care of, they fixed. And ever since then, it's been running. But speaking of Bitcoin particularly, bankruptcies and falling profits spell doom for crypto mining industry. Now, before you freak out, this is a little bit of a double-edged sword. There's 2 ways we can look at this. Number one, we do have potential issues for the cryptocurrency miners. Now, if they do have to start selling for a loss or just selling to simply, keep the costs going, then they could potentially crash the price. However, we do know that a lot of these guys deal with OTC brokerages, right? Although, again, a lot of them were dealing with Genesis. So you can kind of see how the web of entanglement is growing, right? So this could be a short-term issue, seeing these miners, putting selling pressure on the markets. But if these guys go belly up, there is sort of a positive side to that. And that's that basically that will just take them out of the equation. Not necessarily great for the hash rate short term, but the difficulty adjustment would adjust for the rest of the miners, right? This is how it's built in. right? This is exactly how Satoshi designed it. So, he anticipated the booms, or he, she, they, we don't know who Satoshi is, but, they, them, whoever Satoshi is, assumed the booms and the busts and knew that we would need to put that adjustment into the Bitcoin code, into the Bitcoin monetary policy, right? So while this may be bad short term, I don't think long term it would have any detrimental effects, because we've seen this happen before. In previous markets, we've seen miners struggling. We've seen miners shut down, right? Now, interestingly enough, you have the financial advisory firm DeVere Group CEO Nigel Green saying that he's actually optimistic that the crypto bear market is maybe just months away to coming to an end. Now, for everyone out there, just because the bear market is coming to an end does not mean we go into a direct bull. We can have a very slow grind, right, before we see any major price action. According to him, the assets that depreciated following the rate hikes, such as cryptocurrencies, could start rallying, and he says this could happen sometime around April of next year. Right around tax season, conveniently, right? Assets that most benefited from low interest rates naturally hit hardest in 2022 because of the hikes, but we expect as the program unwinds, which is likely to be in the second quarter of next year, these will be the assets that will experience some of the biggest rallies. Although the high-octane rush of previous rallies is unlikely, instead we will see a steadier continued upward trajectory for Bitcoin when the unwind kicks off, arguing that confidence is starting to creep back into the markets. But obviously, we have some of these big players, sovereign wealth funds, right? Those guys with the trillions of dollars over in the UAE, still being a little bit skeptical. But many serious long-term investors will be using the current low valuations as a buying opportunity. One good thing about the hikes has been that as the sugar rush of free money faded away, we could see the real value of assets. Despite coming down 70% from its hype and heat-fueled November high, Bitcoin remains the best performing asset class of the decade. And that still is a fact, right? And obviously, one of the things before we move on, before I get to the charts, is a lot of people like to always look at the Bitcoin all-time highs. They go like, oh, it went from, 20, but then fell to 3, went to 70, but then fell to 15. And they're like, well, what kind of an asset is that? Right, but that's the euphoria stage. That's when everyone gets crazy. That's when everyone just starts, recklessly throwing money to try to make as much money as fast as they can. But what you really need to do is look at the lows for Bitcoin. And if you actually look at the yearly lows, we have continued to put in higher, lower lows, over time. And literally, if you wanted to break that trend, if you wanted to completely destroy the Bitcoin chart and break the trend of lower lows or higher lows, you would have to go below $3,000. I highly doubt that's happening. I just don't even know who would be willing to sell at that level. And the U.S. Central Bank has reported plans on making smaller interest rate hikes going forward. This signals the end of a cycle of hikes, 3 so far this year, each of 75 basis points that were the steepest since 1994. So this doesn't mean that we're out of the woods just yet, but as they begin to lower them, eventually what I believe they'll do is they'll leave them flat. And during that flat period, I believe we could see assets rally. Then what they'll do is they'll reverse it. Now, historically, you would think reversing them, starting to lower them would be good. Historically, though, actually, when they do officially do the pivot, we do actually tend to see prices fall. And it's because now we're pricing in things that happened months before, right? But the good news is that generally after that pivot, we usually only have about maybe 3 months or 4 months of this downwards. And then usually, well, you know what happens. Then we go on those 4-year, 5-year, 6-year, 10-year, rallies as they turn on the money printer again. So it really is just a game of patience. It's a game of accumulation at this point. And as I said, we are seeing currently, though, and if you want to talk about the short term, there's 75% of investment product inflows suggesting that, people are negative because these are mostly in shorts. And we're also hitting the lowest two-year point of assets under management, only around 22 billion. Bitcoin saw inflows totaling about 14 million, but when offset by the inflows into short investment products, the net flows were actually a negative US 4.3 million. So this just goes to show you sentiment very negative right now. They are looking to short right now. They are thinking that there is more pain to come. That is a possibility. There could, in fact, be, more pain to come. But at the same time, we could also potentially see a short squeeze. So let me dive in and show you guys what we're looking at here. So it's the weekend. We're coming off of a holiday, so it is quite boring. But as you guys could see right here, I did point out the fact that it was quite impressive that Bitcoin was able to find support not only off of 1, 2, but 3 separate trend lines. You could see we had this bounce right here, and we are continuing to put in higher lows. You may even argue that this could have been a bear trap. We don't know yet. We need to see the rest of the structure. But if you kind of just scribble this out right here, you could see that we are actually putting in higher lows with the exception of potentially that bear trap moving forward, right? Now, you can see the support that we've had on the downward sloping trend, and we have had a double bottom thus far. I mean, do we know if it's definitely going to happen? I don't know. We could crash tomorrow. I doubt that's going to happen. But you can see right here, there is that double bottom being put in. So what do we have to do? Well, if we go back over here to the 4-hour, super short term, basically, we just have to get above this area right here where we've had all this resistance, right? That area is around, it's basically actually $17,000 even. So again, as I've been saying, come up here, 17, come back, boom. That's where you could put in the trade if you want to do the long. You could also do the reverse here. If we came down here, came back up to, let's say, this 16.3 or even this trend and got rejected, you could put in a short. Now, I'm not telling you guys to short this low in the game. It is risky. Also, 75% of the institutions are apparently shorting right now. But, that is a possibility of a way you could play it. Now, the next level that we would look at, this is on the daily. That's the shorter time frame. A more important level coming back here is this wick right here, right, which is around 17.5. But then super important right here, we have this massive structure of support right around $19,000 even, or 18.9 depending on what exchange. So, realistically, the next level on the daily would be Bitcoin coming to about 17.5, 17.6. But the ultimate level that I would be looking for to truly confirm if we're having that reversal so far is this level around 19,000. I might have said 1900 before, 19,000, but we're still not really anywhere close to that. But here is something extremely interesting that we do need to point out. So if we just have a look at the overall Bitcoin chart on the weekly, you actually find something incredibly interesting. And this is something that we have never seen before, right? So basically, what you're seeing right here is, as the RSI, goes higher, puts in, lower highs, or higher lows and higher highs, you can see right here that we're going up. When it's trending down, right, we're trending down. When it's trending up, we're trending up, right? When it's trending down, I don't know why I just made that smaller. When it's trending down, right, what are we doing? We're trending down, right? And you can see that this goes, down, up, right, down, up, same thing. You guys could see down, up, right, down, up. And then we, of course, have this coming all the way down here, this coming all the way down here. But if we look right here, guys, right here, what are we seeing? For the first time, we're actually seeing a bit of a divergence to the upside where this is moving to the downside. So this would signal that it could potentially be a bullish divergence, and it would be something that you can see that we've never ever seen before in the chart. We've only ever seen the weekly RSI literally do exactly what the weekly chart is doing. And, zooming in here for the first time, ever in the history of Bitcoin, we've actually seen trending downwards while this is trending upwards, right? So nothing to get super excited about, short term. Could it just be a fluke in the charts? Could it just be because of all of the liquidations and the FTX? Of course it could be, but it is just something to point out. This is a little bit more speculative, but let me show you something that's not. Right here, guys, the number of known addresses on the Bitcoin blockchain that hold 1 Bitcoin or more has hit a new all-time high. According to blockchain analytics company Glassnode, the number of wallets holding at least 1 Bitcoin or more has reached 950,000. Now, let me just back up a second here. The reason that this is different than just saying, oh, the number of addresses is going up, I don't believe that metric. To me, that metric doesn't work. They say, oh, there's more addresses now. When you get a transaction and you have a ledger or something like that, right? Every time you receive it, if you're doing it on your ledger live, you get a newly generated address, right? So you could have one individual that has 100, 200, 300, 500 addresses, right? Depending on how many transactions this individual is doing on the Bitcoin blockchain. So addresses alone, in my opinion, are not a good indicator of, bullish sentiment, bullish accumulation. But what is addresses holding at least 1 Bitcoin or more. Because what this is telling me is regardless of the amount of market participants, right? Could be 500, could be 5,000, could be 1 million, nobody knows, right? But What we do know is that they are accumulating because we're seeing more wallets holding more Bitcoin. You see, that to me is showing that there are hodlers, there are buyers out there that are accumulating, right? Regardless of how many there are, we're seeing an increase in the amount that they're holding in their wallet. You actually had Bitcoin podcast host Jake Woodhouse. He says, to the untrained eye, the price of something reflects the value. However, price action should not be confused with value. As the most recent data in the Bitcoin market represents, plebs around the world are hoovering up Bitcoin as they see this an opportunity to accumulate a wildly undervalued asset, which most assume has no value as the price collapses. Bitcoin is dead, shouts the mainstream. But is it? Is it? Clearly, many disagree. And I mean, it's not even just the fact that it's gone up. I mean, look at this spike recently, right? So that to me is saying that there are definitely people who are interested in accumulating Bitcoin. Also, I know this is a little bit old news. I didn't make a video yesterday, but the CEO of ARK, Cathie Wood, she's still all about Bitcoin hitting $1 million by 2030. Again, price predictions. We know that, the same thing like 100K never came, 1K never came, 1 million by 2030 might not come. I believe that Bitcoin is going to go to $1 million in our lifetime, but in the next 8 years, I don't know. I don't know if it'll get that high. I do think, though, in the next 8 years, we will have completed that Fed cycle. The Fed will obviously have, it has no choice but to pivot at some point. Like, you will literally collapse the entire system if you continue. And 2% is not happening. You can quote me on that. We're not getting to 2%. Quote me. Hold me to it. It's not happening. But anyway, she went on to say that we think Bitcoin is coming out of this smelling like a rose because of what I have mentioned previously. And I do think, though, one thing that will be delayed is perhaps institutions stepping back in. Obviously. But, just saying that, eventually they're going to say, okay, we do understand this. And once they do their homework and see what's happening here, they might be more comfortable moving into Bitcoin and perhaps Ether as a first stop. And I think that the more people actually educate themselves about the fact that what we have seen this year has nothing to do with the Bitcoin network. It really doesn't even have that much to do with crypto. It has more to do with over leveraging and, these big centralized players taking your money that you trust them with and doing whatever they want to in the background irresponsibly with it. That's really what we're seeing, right? We're not seeing any effects or any issues on the Bitcoin network itself. And just kind of ending on regulation here, just to point it out there, the Belgium regulator stated that crypto assets like Bitcoin and Ether do not fall under regulations for securities since they have no issuer, which is why when we do get this regulation eventually, I do believe, unfortunately, a lot of these coins are going to fall under unregistered securities, which is going to be kind of, difficult and probably there's not going to be as much speculation on the altcoin markets. But knowing that Bitcoin has been classified as property, as a commodity, right? This could be good for Bitcoin long term, which is why I continue to remain bullish on Bitcoin long term. Short term, we could see some more unraveling, but I really think it's a matter of education, and I think it's extremely important, especially for us in the space right now, to educate people on the fact that this is not the Bitcoin network. This is no issue with the monetary policy or the decentralization. This is people willingly choosing to deposit funds, leave them on exchanges, right? If you're not trading, if you're trading, that's one thing. You're already taking a risk. If you're not trading, why are your funds on the exchange, right? And hopefully, unfortunately, this was a very expensive lesson for a lot of people to learn. But as people begin to dive into Bitcoin, I do believe that there will be the light at the end of the tunnel. There will be the pot of gold at the end of the rainbow. There will be the silver lining, or you guys know the drill here, right? Bitcoin is here to stay. I love you guys. Be safe out there. I know these times can be tough. We've gone through this before. It's just another bump in the road, but we know that heroes are born in the bear markets. And my goodness, if you make it through this, which I know you all will, what a legendary story this will be. So you guys rock. I hope you're having a great weekend so far. I'm not really expecting any price action too much over the weekend, and anything that we do get, I'm not going to take that seriously until we see the actual real trading come back in on Monday. So on that note, I will see you guys tomorrow. Have a wonderful and beautiful day. Remember, take advantage of Ledger and also the Cyber Monday sale. If you do want to, you can start trading these charts with me if you guys would like. And of course, if you do want to learn how to keep your crypto safe, check out this tutorial popping up right here, right now. Until next time, stay crypto. And of course, peace out.